Hello and welcome to another Daily Dose of Insights powered by Content xChange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Friday, so we have what we call Fundamentals Friday here at xChange, where we typically look at one particular interesting topic to provide some food for thought for the weekend for all of you. Something that I read yesterday, I just wanted to highlight real quick. Is an analysis from xIntelligence. Let me just quickly share my screen here to give you a little bit more guidance of what I'm talking about. So xIntelligence essentially looked at how carriers have increased prices, especially during the pandemic. So in the time of Q4 2022 up to sort of Q3 2022. The question here was whether loyalty pays off. So whether the fact that carriers honor their longer term and cheaper contracts in time when spot rates are clearly elevated and are clearly above the contract levels, whether they honor these contracts and forego the juicy spot rate opportunities, whether that pays off in the subsequent downturn. And as you can see here, you see two lines. One is the market average rate development in the market, and the orange line is Maersk's average freight rate. And this is on a quarterly index basis. That's why these curves look a little bit sort of edgy. And what you see here is clearly that in the period of those 2 years, Q3 22 to Q3 2022, the market price increased significantly faster and significantly more than what Maersk essentially did with its rates. And that means that overall, Maersk here forwent sort of significant part of its revenue. So it could have earned more on the open market than what it actually did with its carriers. Now the problem with its customers. Now the problem is that in the downturn, Maersk rate came down just as fast and just as much as the market average. So there's no sort of upside here in the downturn, where you could assume that customers would honor their contracts in return and also pay higher freight rates. So I thought this was very, very interesting. And you can see that here, even on the right-hand side, a little bit more illustratively, these are sort of total revenue gain loss versus market average across carriers. And you can see here that Maersk actually forwent more than $15 billion in total revenue, versus a ZIM that raised prices much quicker and much faster and much higher than market averages. We also discussed that previously. ZIM just has a much higher share of its revenues on the spot market, so that makes it also maybe a little bit easier for them to do that. So I thought this was very, very interesting because right now, again, we see rates increasing significantly, especially spot rates. Contract rates are much lower, but they're not being honored to a large extent by carriers, again showing that loyalty is not held very high on that end or sticking to contracts. And that's really an age-old question. And there's a couple of companies that try to put enforceable ocean freight contracts in place. New York Shipping Exchange being one example, trying to really do that contract management and contract enforcement to ensure that both sides stick to a contract, even if there might be sort of juicier or cheaper or more expensive spot rate opportunities out there. So just wanted to share that ahead of the weekend. I thought this was very, very interesting. Maybe you think so too. In any case, have a fantastic start into the weekend or a good celebration of Midsummer if you celebrate the longest day of the year here on the Northern Hemisphere. Yeah, see you all on Monday. Take care.